Well, yes, we are looking at consumer market today, and like you mentioned, 150 million people. It's attracting huge investments. Joining me in the studio to take a look at 2010 and the outlook for 2011 is Kayode Akindele, who is CEO at Green Strategic Partners. Thanks so much for joining us on the show. First of all, let's even start with the stock market. Very positive things to talk about consumers this year. Standard IBTC's food, beverage, and tobacco index is up about 38% compared to 17% for the index. We've heard, of course, several huge deals, very interesting transactions, all focused at the consumer. We have Spar coming in this year. We had Tiger Brands doing a deal with UAC. Late last year, we saw KFC also coming into Nigeria. So the attraction really is the numbers, isn't it? The demographics and that young population that we have.
Exactly. You can't really have an African strategy in consumables without Nigeria. Nigeria is the biggest and will be one of the most important markets. And I think a lot of investors are seeing that and are trying to take positions in Nigeria as going forward.
And then, the interesting thing about Nigeria's the trends in Nigeria is that the level of debt for the consumer is very low. And obviously with the credit crisis which we've had this year, well, not much of a credit crisis, but more of a credit crunch with the banking reforms, we've still continued to see quite a few consumer-focused companies do extremely well.
Yes, what has happened is that a lot of the consumer companies, especially the multinational ones like Nestle, Unilever, they'll be able to increase capacity based on either through internal intercompany loans from their parent companies or through internal resources, and they're able to expand capacity despite the credit crunch. I mean, the main effect the credit crunch has had on these companies really has been on their distributors. The distributors are finding it more difficult to get financing to buy inventory from them. That's the main difficulty they had from the credit crunch.
And then let's look at the stock market. We've had the likes of flour mills, Dangote flour, reporting extremely good performances in terms of price performance this year. And that is really on the back of a recovery from last year where we saw quite a few of them under pressure with the exchange rate crisis, so to speak, in late 2008. We've seen a huge recovery, obviously, in consumer stocks. What's the outlook for these stocks in 2011? Do you think valuations are already quite rich at this stage, or do you think there's still some way to go?
I think valuations are quite rich on one or two. For example, Unilever and Cadbury, their price-to-earning ratio is quite high compared to the sector. So I think they've done quite well from that point. I don't see them increasing quite substantially as they have this year. I think also you have to look at the performance in 2010. They've managed to maintain margin, although there's been some margin pressure because input prices have been lower than they were in 2009. Of course, they've also had FX stability, as you mentioned. Going to 2011, if you have continued FX stability, the one big negative possibly is wheat prices. With the fires that happened in Russia and this summer and the contraction expected in wheat exports, and there could be increase in wheat prices, and that could have an effect on some of their margins going forward. Obviously,
in 2011, we anticipate more foreign entrants into Nigeria. Of course, the Tiger Brands deal should be concluded sometime in the first half of the year. We expect more people to come in. The attraction really is in the demographic. We have about 63 million Nigerians, according to the World Bank, are aged between 15 and 39. That is what is attracting them. But in the light of all this, what would you say is the biggest risk going into 2011? Is it more of inflation, or is it more of the exchange rate risk, in your view?
I think there are quite a few risks. I think one, elections. We can't forget elections 2011. In the sense of if you need credible elections and stable elections to encourage investment. I think they also look at inflationary pressures. Inflation seems to be spiraling out of control, especially government spending, and the CBN has to try and rein that in. And I expect the CBN to take a more forthright stance on inflation early next year. And in terms of the FX stability, there's been pressure for the devaluation of the Naira. Now, if the Naira can remain stable through 2011, this will also help these firms, because a lot of these firms, they import quite a lot of their inputs.
But overall, 2011 should be a good year, you think?
I think it should be a good year.
All right, let's leave it there. Thank you so much for your thoughts. Interesting analysis there from Kayode Akindele, CEO of Green Strategic Partners, giving us his thoughts on the Nigeria consumer market. On that note, it's back to you. Enjoy work.